okay, we are coming through Labor Day weekend. This coming Wednesday is the day that we're going to have another Bank of Canada meeting. We know two things have been wildly predicted at this point. Now, doesn't mean the Bank of Canada will do that. We've seen both January and in July where what they predicted was not what happened. January, where they thought rates were going to move up, didn't happen. July, where they thought it was going to move up 0.75 basis points, and they moved up a full point. So we know two things. We know that it's wildly predicted that the pause in interest rates will happen after this rate hike, that that's the end of things. That's widely predicted as being the case. The second thing is that it's predicted to be a 0.75% or 75 basis points hike. So, if you had a prime rate, prime minus 1, that will put you that will put prime at 5.45, so you at 4.45. So that's just kind of where things are sitting from that perspective. We can't change that. I think a lot of people, we get we don't get that many calls, but, we get people going, what are we going to do about this? I think, people need to realize that the fixed rate still remains much higher and has been much higher. And I remain very worried about removing the options from people. So if I got and I'm just reiterating a few things here, but this is going to be important because we're just going to do an update confirming what things do on Wednesday when this happens. So you'll have to refer back to this video. If I'm worried about my payment, I can go to a fixed payment variable, or I can go an interest-only payment. I can restretch out my mortgage payment. What will that do for me paying it off faster over time? Not good at all. I will just, I will pay more interest, and I will pay things off over a slower time period. That's just the reality. So that is how that's shaking out. That's if I'm worried about the payment. So that's how I can fix that. Number two, should I be locking in? No. I mean, this is the reason we don't recommend locking in here. So a lot of people in the last while have been like, hey, I've done, now I'm totally screwed on a fixed rate. I wouldn't say a lot of people, actually a very small amount of people, but remember that like anybody that had a mortgage prior to like 2019, 2020, they've enjoyed the lower interest rate for quite some time. And this is the point where they're just paying the higher interest rate. So for them, no, they haven't done, we don't regret them taking the variable over the fixed rate because the data is very strong. 9% of the time it's not to a variable outperforms the fixed rate. If somebody has taken a variable rate like last year, 2021, and they're in 2022 going, oh my goodness, I should have taken a fixed rate when they were low, also doubtful to be proved to be true, because what's going to happen is that like you have 4 years, and during that 4 years, if you lock in, I know for a fact we're going to have people calling being upset that they locked in, knowing that the interest rate will be lower on the variable at some point. Really, we have a recession that's unavoidable at this point. I cannot say this enough. This is the most important thing. Why we don't want people going to fixed rates over variable rates is that your penalty is 5 times greater. So if I want to sell my home, if I want to port my mortgage, if I want to refinance for renos, if I need to get divorced, all these things, which is impossible to predict, a fixed rate will cost you dearly. There is not one client in our database that is in a situation where if they would pay off their fixed rate or variable rate early, that they would do better with a fixed rate. So this is really, really important to be aware of. You limit your options significantly when I take a fixed rate. So the deal here is that locking in the fixed rate is not the best option in any of these types of things. People talk about 1 and 2 year fixed rates, and those could be some legitimate ways to mitigate the risk, but we probably not worthy of a call at this point, or worthy of going to depth at this point. But individual situations, we could really present those to clients. So that is important as well. What do I think in the future? I think that I'm holding tight on my variable rates because I don't want to lose the flexibility. So that's a big deal. I'm going to hold tight. I need to, fixed rates are up and variable rates are up. So things are just, this is a reality, and I know this is not a perfect reality. things are more expensive. Even someone that says, "Oh, I could have had a fixed rate last year, and I would have been guaranteed a lower payment," you would not be, because either you believe that rates are higher or short term, and then you're really not worried. If you think rates aren't as high for short term, there's really no worry. You want to stay variable then. If I believe that rates are now at the point where they are higher for the foreseeable future, at some point I'm going to have inevitably then everyone's going to have a higher rate, and I have to plan my life and adjust my budget in order to pay for the higher rate, and that is just a reality. We're going to do we have some resources we put out on really two things we've talked about before. Good financial information to listen to that's really helpful, and two, different ways you can increase your income as far as inflation and that type of thing. I find it interesting, though, is that we've talked about doing interest only and locked in payments. Not very many people take advantage of that. Prior to the beginning of last year, we encouraged people to do what's called a payment reset. A payment reset is when you redo your mortgage at the lowest possible variable rate. And we had, people take advantage of that, and they're doing way better. But not as many people as I thought. They didn't see it as beneficial even to do all the paperwork. So what does that tell us when we go into this information is that, we have people that are not as bad off as we think. Now, this is not to negate the fact that, rates being higher is painful and is stressful, and anything being a higher monthly basis, taking away from your bottom line. I mean, it is not great news, and it's annoying and it's irritating. But stay with us. Let's make a plan. If we haven't made a plan for things, this is just about. I think this thought that I leave you with is that this continues to be a situation where it's not about making an irrational decision, which in my mind is locking into a fixed rate, but it's about noticing that you're in the middle of a storm and battening down the hatches and making decisions and choices to get through the storm rather than jumping yourself overboard and really down the road. And I think I've said this in a video, but I will leave you with this thought. Although I hate the phone calls that we get where people are worried about the fact that they have they have higher payments. Not great. I don't love it. I have higher payments, all that stuff. I'm way worried about the people that call me when they have a higher penalty of $20,000 or $30,000 and they can't clear the title when they're getting divorced or need to move or change of jobs. Those are way more difficult conversations. And we have to remember that as a general rule, banks are not your friends, and so these things are weighted towards their favor. I'm surprised how many people when they see something saying, "Oh, my bank says to lock in," Scotiabank called me and says you need to lock in. They are not your friends, so they are giving you advice that is helpful for them. Anyway, please subscribe to this video. If you've not subscribed to our channel, share with your friends. We love to help them. If you want to chat through your mortgage options, let's get on the phone and let's chat through them. Thanks so much. Have a great day.